Richard Roach faces the Angels for funding and expertise to put on an extra floor on a block of flats in a lovely coastal town. What you're about to see is Richard Roach's pitch for funding that he made on the hit Sky TV show Property Elevator. Property Elevator is a bit like Dragon's Den, but for property. Property entrepreneurs come on the show to pitch for funding for their property projects. On the show are 5 property angels: Nicholas Wallwork, Helen Chorley, John Howard, Paul Mahoney, and myself. So what you're going to see now is the pitch as it went out on TV. We're going to freeze the action now and then, and I'm going to kind of share with you my thoughts and analysis. If you haven't already done so, make sure you subscribe and hit the bell icon so that you're notified when we upload new content to this channel, and smash that like button. It means more people get to see videos like this on YouTube. Without much further ado, let me hand you over to Elizabeth Warburton, the show's presenter, who meets Richard Roach before he comes in to face the Angels.
Hello, Richard.
Hi, Elizabeth.
Welcome to Property Elevator.
Thank you for having me.
So tell us a little bit about the deal that you've brought today.
Okay, so the deal I brought to the table today is a 2-storey, 4-unit apartment block in Frinton-on-Sea.
Okay.
It's very tired, but it enjoys spectacular sea views.
Amazing.
And it has planning consent to put an additional floor on, which will house a 3-bed luxury penthouse. And then the plan is to refurbish the existing part of the building and turn it into a luxury development and eventually sell them for a profit.
Beautiful. Sounds very exciting. So what are you after from the Angels today?
There's 2 deal structures I'm going to put forward to the Angels.
Okay.
One is for 100% investment, which will be circa 2.3 million at a profit split of 70-30 in favour of the investor. Or they can invest the initial deposit for development finance at around 600k for a 50-50 profit split.
Brilliant. So 2 great options.
Yes, hopefully.
Very exciting.
Thank you.
Good luck.
Thank you.
I'll chat to you when you finish.
Okay.
Richard coming in next, and I believe he's come up all the way from Cornwall today, and he's got a deal in Frinton, and Frinton is an area or town I know very, very well. So it'll be very interesting. Do anyone else know Frinton well?
You
No. know everywhere well, John.
Not
I was about to say that, actually.
everywhere.
So the deal itself is in Frinton-on-Sea. The reason why I've chose this location is because I think it's extremely well placed to capture the seismic movement of people wishing to relocate to the coast. Frinton is in commuting distance to London. It has excellent transport links to the rest of Essex and London. The key thing it has is a huge undersupply of luxury apartments which are in demand. And more importantly, it ranked 17th in a recent home buyers report for the top 20 coastal locations for Londoners moving to the coast. The deal itself is to purchase an existing 2-storey block of flats which has 4 units, both at 74 metre squared each, 2 on the ground floor that have 3 beds, and then 2 on the first floor that have 2 beds, but they're all the same square metre. The difference is the ones on the first floor have a smaller kitchen, a larger kitchen, and they put en suites to take the space of the 3rd bedroom. Despite the property, which you can, it's not on there, but I did send it. It's basically
We've seen it. That's
it's a kind of 50s, 60s nondescript red brick building, and it looks tired. I wouldn't say it's run down, but it's definitely tired. But the thing it has going for it is located on the Esplanade, and it has uninterrupted views of the ocean. Now, this particular property has planning consent to add an additional storey to house a 3-bed penthouse, which will have balconies facing the sea, but also a higher level roof terrace, which is 118 square metres. The proposals also allow to refurbish the existing part of the building, add a lift and lift shaft so it becomes DDA compliant, but most importantly to redress the facade in this striking Art Deco design to match in with Esplanade Court, which is situated next door.
So what we've got here is a very, very polished, presented pitch from someone who's got considerable experience, which is always a good sign, and who has so far got all his ducks in a row, well researched on the location front and the demand for the end units. It's very, very good to actually have a clear view of what the end game is, which he has here. Now, there is this opportunity in taking, as Richard said, tired 1950s nondescript blocks and just giving them that facelift, because that curb appeal is a strong part of value enhancement. He's also mentioned here that this is something that planning permission has already been obtained for this extra floor on the top. Now, one thing to be wary of when someone is selling you a property with planning permission already granted is to get behind why they haven't implemented that planning permission themselves. It may be that that's not their business. Their business is simply to get the planning permission and sell it on. Or it may be that there are other reasons why they haven't decided to implement the permission, which are worth probing a little bit further.
And this, from what I can see next door, Esplanade Court, is the only luxury development in Frinton-on-Sea. So the key financials on this deal are as follows. The purchase cost is 1.25 million. This is excluding legals and stamp duty. However, from speaking to the selling agent, they believe that the landowners are potentially chancing their arm and have put that out there and seen what happens. I've put this in the appraisal, but I do believe there is scope to reduce this. Build costs, just shy of 900,000. This includes a 10% contingency, and I've priced in around £90,000 of abnormals, which include the facade works and the lift. Professional fees are coming in at 93,000, which includes design fees and completion fees. Sales and marketing, 18,000, which I've struck a deal with a local agent. Finance costs is 182,000, but this depends on one of the deal structures, which I'm going to go into further, and bringing the total development cost to a possible total of just over 2.5 million. Now, the GDV is potentially...
Now, I just want to make a quick comment about the way he has broken down the costs, which is always a good sign. I think too many people come on the show and they are very, very broad brush with their cost estimates. They've heard that it should be, I don't know, £200 a square foot to do X and stuff like that, and that's what they quote. It may be, it may not be, but having thought about each constituent component of cost and broken it down in the way that Richard has, shows that he has actually thought this through, and it also demonstrates that he's clearly done these sort of projects of this sort of scale before as well.
3.68 million based on a gross internal area of just over 4,500 feet. This is based on a blended square foot rate of £806 per square foot. So the deal I'm offering is basically can be structured in two ways. Option one is 100% angel funded, where one of yourselves could potentially fund the whole of the deal. This provides a profit of just over 1.3 million. Profit on GDV is 36%. Profit on costs is 58%, and the...
Now, those regular viewers of this channel, and if you are not a regular viewer, then make sure you subscribe and hit the bell icon so you're notified when we upload new content. But regular viewers will know that I bang on about metrics, if you like, for gauging whether a development is successful. And one of the key things he said there was that return on GDV is 36%. Now, I strongly believe that in the current market, you shouldn't be bothering to get out of bed to do any kind of property development unless your margin is 36%. Now, what do I mean? But what do we mean by return on GDV? What we mean is, well, GDV is, of course, the gross development value. So what is the end value of the complete development? And then you take your profit. And your profit is simply the end value minus your total costs. That gives you the sum of profit that you're going to make. And then you just divide the profit over the end value, and you get that as a percentage. And when you're clear of 30%, that's very, very good. And here this deal is 36%. By the way, the full episodes of Property Elevator are available for free on the Property Elevator catch-up service, on-demand service. So if you sign up there, you also get notified when there are new episodes of Property Elevator coming on the telly, or some of the Property Elevator lives that we're doing around the country. You'll get notified of those things as well. And you can find out all of that and sign up for free at propertyelevator.tv.
Investment required would be just over 2.3 million. The profit split for doing this would be 70-30 in favour of the investor, because I recognise it's a considerable amount of money to put up, and also as I went into at the start of my pitch, it's about securing a partner rather than just someone for this deal. So the total profit for the investor would just be shy of £950,000. Deal structure 2 is development finance, with the angel investor putting up the initial deposit to secure the development finance. The total profit on this would be obviously lower due to the financing cost and would be just over 1.1 million. This lowers the profit on GDV to 31% and the profit on cost to 46%. The investment required from the investor would just be shy of 600,000. The profit split I would take down to 50-50, but I'll potentially look at 50-60 if it was of interest. The total profit on the 50-50 split would then be 582,000.
I think my general view is it can get a little bit confusing if you start to present multiple options. I would just stick with your best shot, quite frankly, and leave it to the angels to sort of counter offer or come up with alternative proposals.
I've appraised both options as a development appraisal, cash flow and sensitivity analysis, and you will see that with both options you get your money back within month 20. I've also carried out a sensitivity analysis to show that even if there was a knock in values or an increase in build costs, which you're all expecting due to the effects of COVID, this scheme still has a good level of profitability that I believe. So in summary, I think due to its location, the comparables, which I can talk about in a minute, the planning consent, and the complexity of the works themselves. There's no engineering, there's no groundworks, the risk is always in the ground, as we know, there's none of that. I think this represents a good deal, and I would love the opportunity to work with you on this. I'd like to thank you for listening and invite any questions you do have.
Very polished pitch. I think the things I liked about the pitch were that it was very, very clear that he's researched the location, because as they say in property, it's all about location, location, location. He's got a very clear idea of what the end game is and the market or the exit route for the flats once they are developed. And he's also got a clear idea of what the costs will be to get there. Because whenever you're doing a property project, you are where you are and you need to be where you need to get to. But what is the route plan? What are the costs that will take you to your destination? And also, have you actually taken into account things that can blow you off course? And that's what he's talking about when he's talking about the sensitivity analysis, which is all good stuff and very, very solid.
Richard, very impressive.
Yeah, I think you've answered all
You know,
the questions.
good to have someone on
You've
with
done
that
a,
stuff.
you've done a
Wow.
great appraisal of it there.
Yeah.
So
I'd
who would
say
like
it's
to
one of the
start? That's one of the best, definitely.
It is, and this pack is just, you can tell that this is what you do for a living. You do this professionally. We've not seen anything like this. Like, I squealed when I saw that.
I couldn't do anything like that.
It was
So
like, wow. Yeah, so talk to me about the time frame on this. I'm sorry, you said repayment within month 20. Talk me through the rest of the time frame, please.
So I think I've allowed, for memory, a month sort of pre-exchange, 3 months from exchange to completion, 2 months to carry out any investigations of the existing building and get the stage 4, REBA stage 4 design before we start on site. I've spoke to a few local contractors in Frinton and both Colchester to get an idea of build programme. It was actually very difficult because the deal that I was going to bring here today fell through at very short notice.
Oh.
And so on Friday, I spent Friday, Saturday, Sunday, Monday trying to find this deal and trying to get a builder to look at this.
You've done all that.
Yeah, I missed the football and my partners weren't very happy with me. But so trying to basically, everyone's so busy at the moment to try and get a builder to really look at this and throw anything more than a metre costs and an idea of programme is very difficult.
I think this is a very interesting proposition. I've got a couple of questions. I think looking at the building next door,
Yes.
they've got 2 floors in addition to this existing building.
Yes.
I'm just wondering why the reason why the planning for this building wasn't 2 extra floors to match. Was that a planning issue, or was that to do with can the existing building structure take it issue?
Well, that was the sort of first thing that I looked at, Ranjan, really, because I'm always looking for an angle to maximise GDV, lower costs, etc., and it just screamed out that, you know, why have they done that? But on doing some due diligence on the planning portal, there had been 4 or 5 applications all kicked back, and they haven't gone for the density of next door. All they wanted was to get 2 units on the top floor. Every time it was knocked back, they went for 1, it was knocked back. The only reason this time it got passed is because they were willing to do the Art Deco architecture on the facade, which is quite interesting.
Now, I like the way that he has thought of that possibility. Well, why is the one next door 2 floors above and this one only 1? And he's looked into that because I think too many people would just assume that, oh, next door have got 2 floors on top, they're higher up, so we're going to get it. So he's actually looked into it.
Good answer. You've got an answer for everything, and that's very impressive.
Comprehensive.
Ranjan, they couldn't do it on the PD, on the new PD, 2 extra floors?
Actually, there is maybe something there to look at.
Hang on, is that John giving Ranjan advice on PD? Did I just witness something,
I just
John?
put it out there.
It must be rubbing off when you sat next to him.
I've sat here for days. I'm learning from
you're
him.
learning.
And I'm not on one of his courses yet.
No, you're getting it for free. Do you know if it's an Article 4 direction error or anything like that?
I wouldn't have thought so.
I don't have an answer for everything.
That's okay,
I didn't look
don't
at that, sorry.
Okay, so the Article 4 direction may have been a little bit of a red herring there, because I don't think there are too many Article 4 directions on rooftop developments. John raised an interesting point there, and I think I come on to answer that a little bit later on, so I'll let that clip play out. But what's happened here is they have actually gone for planning permission to add an extra floor. Now, the thing is, there are some permitted development rights that have just been introduced, which also allow you to add extra floors to buildings. And of course, permitted development is far more simplified a process than full-blown planning application. So what John is querying is, why the hell have they gone through the hard way to do a full planning application when they could have been a PD route? Well, it's likely that because of the time that this episode was actually filmed, basically the PD rules just came in that allowed you to put extra floors on buildings, and this planning permission was pre-existing that. It was before those rules came in. But let's just play it, because I kind of explained that point a little bit further.
Yes, I've got one. Give an answer.
I'm still trying to process all the information. Wow, there's
It's 6 flats.
I love that
it's
we've
6 flats, Helen.
but I love that we've gone into like the detail
I got that wrong.
of
It's
even
5.
managing the cash flow of the drawdown. Like, you know, that's super impressive.
There seems to be a lot of potential variability on the sales prices, which is what makes or breaks the deal.
I don't see any negatives to affecting that price downwards. You've got solid comparables. You've got a booming market in this area.
You don't. You've got one comparable.
You've got one comparable, which is a ground floor one. It's the worst one in the block.
It's a valid point. If I didn't get the sort of agents back up to that, and you know, the guy's been in business for 34 years, he clearly knows his market. And living in Newquay, I can only see what's happening on my stretch of the coastline, and it is crazy. And I'm assuming that this is happening everywhere. So I can appreciate, you know, one comparable isn't great, but I do feel it's a direct and it's a very good comparable.
That's all that's there. That's all that's there.
Okay. You've heard from everyone else, but you haven't heard from me yet. I've kept quiet, listened to
You've been very quiet.
all this.
It's always worrying when John keeps quiet for so long in the pitch. Let's hear what he has to say.
Abnormally
All
quiet.
this A few things. 1, I know the road. 2, I know where the property is. 3, I've done other deals in Frinton. 4, I know the agent. He's been around a long time, very experienced, sells most of the stuff in Frinton. This market won't
Very disappointed there wasn't a 5 there from John.
continue. So we have to look at this in a year and a half's time and say what is the market likely to be. And if the market's still great, that's a bonus. If the market's flat, things in Frinton take a long time to sell. They've only just allowed having ice cream vans in Frinton, and that literally that's true. And I think they had the first pub there 10 years ago. Otherwise, you had to go to a hotel to drink. It's a very, very smart area, but and it does get a lot of people from London to second home and to retire. It's an expensive area. To say that's only the 17th most popular on the coast of the UK, I'm surprised. To be fair, I thought it would be higher than that.
It was just one report, John.
Yeah, I'm sure it's right. I'm a little bit surprised. I suppose you either love it or hate it. So everyone who doesn't live in Frinton thinks everyone who does live in Frinton is a snob. So it's a little bit of a love-hate. I mean, it's just up my street. It's just the sort of thing I do. I'd like to investigate the PD to see whether or not why there may be a very good reason why, and there probably is a very good reason why. You can't?
I remember now.
Right.
We're actually doing a rooftop in Tufnell Park.
Yeah.
We got planning permission for it, and then they've announced this PD that you can add extra floors.
Yes.
The thing is, there's a condition in the PD that says it's only applicable if you haven't previously applied for planning permission for extra floors. So had we not applied for full planning for our extra floor, we could have got two under PD. Yeah. So this one's torpedoed by the same thing.
What a ridiculous condition.
Wow. I know, it's just in the legislation.
That Robert Jenrick needs to kick up the backside.
Well, they all do, quite frankly. But you're stuck with what you're stuck with is the summary. So with PD, of course, I mean, it's the devil's always in the detail. And yes, you can do some very exciting things under permitted development, but you've got to know the detail inside out, because otherwise you can buy a property and end up with a lemon. I run a whole bunch of taster sessions on PD, permitted development, and what you can do with existing and defunct buildings. You can sign up for one of those. It's free. The details are on your screen and in the description below.
Okay. We could go back to
that, should I?
No, we can go back. Thank you.
Should have told you that after.
We can go back to
the deal.
We can go back to the planners, presumably, and it's tendering council who are right, by the way. I've got something on with at the moment, and they are hard work. But we could presumably go back if we didn't want to do the penthouse. I mean, what worries me about one big item is that it can sit there. If the market's average, it could sit there for a year without selling. I'd like to investigate whether we could put that into 2 flats, not 1.
Okay.
And I can't see why the planners would object to that.
They've refused it already, John. They've tried to do that and it's been refused.
Yeah, but it's already got planning now.
It's got planning for the penthouse, but previous applications were
refused.
Yeah,
it has, but it's got planning. They've allowed it as one big flat. Yeah. What's the difference between splitting it into 2? Now it's already got planning. Now is the time to go back and rejig things. You've done that all the time. You've got planning and then you've gone back and rejigged.
Yeah, but if you went in for planning first for the 2, they refused it and forced you to do the 1. Yeah, they're not going to let you have the 2, are they?
Why not? They've given us planning. It's got planning now. I mean, it's the externals they're worried about. They're not worried about the internals.
It could be soft.
I have to say, I'm not entirely convinced on what John is saying there. And I will side with Nick's point of view based on my experience. If the council has said, we don't want 2 flats there, that's usually because they feel it's overdevelopment. And then they've knocked you back to 1. So just because you've got planning for that 1, that doesn't mean you can go back and ask for what they originally rejected you for. Because the reason for rejection is most likely to have been overdevelopment, and that would still apply to subdivision of the larger flat.
Often by the fact that it's got the Art Deco style to it now.
So you know,
you can always give it a go. Yeah.
Thank you very much, Nicholas. And if myself and Richard will work together and be successful, we will give it a go probably. So it might be that you give it a go, but I'm just saying that potentially is an option. I would like to make you an offer. I don't know what the other's going to do, but as usual,
gang up on you probably.
Gang up on me probably. So what I would like to do, I'm happy to fund the deposit.
Okay.
You set your own property company up.
Okay.
I'll put the deposit into your property company. You get the loan.
Okay.
Yep. And on that basis, I'll put up the deposit. The bank will put up the senior debt and the bill costs. I'll split the profit with you 50-50 after all costs.
Okay, thank you for your offer.
That's a great offer, because that was one of the offers that he asked for. So you've got what you've asked for, one of your 2 options.
Thank you.
It's a very good offer. Very good offer and very well explained by John.
I will follow in quick succession because I can't beat that. So I'm out.
Thank you anyway.
No worries.
Gone very quiet. You don't have your own build team yet,
No,
clearly.
this area is completely new to me.
Yeah.
That won't be a
And
problem.
although you're very experienced, you are in a professional environment at the moment, so actually doing your own project, you're not experienced. I have no doubt you'll nail it and do extremely well. But I could, help you build this. We've done a substantial number of conversions and deals like this, so I could teach you that. But I'd only be interested to do it with someone else.
Okay,
And I do the build, and I run the build side of it,
okay.
and kind of act as your lead project manager effectively. So it depends what the other guys want to do.
Okay.
I might be willing to do something with you, Nick. I'm actually doing, not in a seaside resort, but in sunny Tufnell Park, a rooftop development of 4 of these sort of penthousey type things. So building on top of existing structures. Haven't done too much of it, but involved in one such project at the moment, which is currently going quite well. So with that experience and Nicholas's experience, that might be something that would work well for you.
Okay. And would that be option 2, I'm assuming, for the...
It's a good question. I probably wouldn't be able to match John's offer. I don't think I think it needs more in it. To be honest, I think John's been incredibly fair to you there. Really fair.
Yeah.
John's bringing the experience and all the money. That's a huge offer. I'd have probably wanted 70% of the equity, so that would be 35 each. That might not work for Ranjan, but you would be getting 2 angels, but less equity.
Yes.
Are you happy to do that, Ranjan?
Yes.
Okay.
I think you are.
Helen left to
Okay, thank
see
you.
where she's at.
I was working my numbers out on something in between both. I was looking at 60-40, but I don't bring the experience and the hands-onness that the other guys bring, so I'm going to step back and let them fight
But you
it
do
out.
bring the funds.
Would that be option 1 or option 2 for the funds?
2.
Thank you all for your offers. This is incredible.
I think, obviously John's offer was very, very good. Generally speaking, if you are providing, it's always hard to figure out what the split will be in terms of the return. If the entrepreneur is putting in some skin into the game, then they can obviously expect a greater percentage of that return. But if the angel is providing pretty much all the equity finance that's required and a considerable amount of expertise, then the entrepreneur is providing some day-to-day project management, running the site and coordinating the whole project. It's usually a minority share of the profit because there is no skin in the game, and there's a considerable amount of expertise coming from the angel as well as all of the funds. So so there's a spectrum in terms of what the split should be, and it's not always 50-50. Sometimes if the person bringing the deal has got no experience whatsoever, no money to put into it whatsoever, and the angel's putting in all the expertise, all the contacts and all the money, then of course the entrepreneur is basically not much more than a deal sourcer. So the spectrum of split can be anything from, sort of 5% in the entrepreneur's favor if they've really just sourced the deal, to something a lot more, 50% or more. So it's very, very variable in terms of what that split is.
It'll be hard. I think I'd like to accept your offer, John. Thank you.
Pleasure. It will be a pleasure to work with you. And guess where I'm going tomorrow afternoon? Down to look at it.
Okay.
Good deal,
Thank you
guys.
very
Well
much. It'll
done.
be great to work with you. And I'm sure, going forward, we'll be doing hopefully plenty of deals together over the next few years.
That's fantastic. It's a dream come true. Thank you.
It's my pleasure.
Brilliant.
Now, what surprised me about that one was the role reversal between you two. You know, because normally you want to pokey eyes at built development by splitting it all up, and he wants to keep them big, and this time you swapped around.
Yeah.
You couldn't understand what was going on there.
See, it's everything we're doing, Ranjan, is rubbing off on John. That's what it is.
I'm learning.
He's doing a PDHMO on top of a luxury apartment block.
I'm learning. I just know Frinton for the last 30, 40 years. I used to play in the junior tennis tournament there and get humiliated every year. So I just know what can happen when the market gets tough there. It goes from being really good to tough very quickly. Because it's second home money and everything else.
You sound like you're arguing against your investment, John.
No, I'm not. But what I'm saying, not at all. But what I'm saying is, I want to, if I can, I want to mitigate that by being able to split that top one into two. Because I'd rather get 450 times 2 than I would 900 times 1. I know it's more work.
Well, that
but
was
I'd rather take the risk away from
that
it.
first question. Does somebody look to go and spend 1.1? And we thought it was 2, didn't we? Beginning. Does somebody look to spend it? I completely agree. You have to mitigate it.
And I know the agent, and the agent is ballsy.
If anyone can do that split, you can, John.
Well, thank you. Let's
I
see
think
how we
that's
get
really
on.
generous.
I was asking for that, so I thought you would have gone 60-40, just because a little bit more than he was asking for.
Yeah, so far as what each party's bringing to the table, I think you were very generous.
Yeah.
He's bringing a lot of expertise.
So John went away with that one. If you want to watch the full episode uncut, you can do so at propertyelevator.tv. It's the Property Elevator free on-demand catch-up service. And if you sign up there for a free account, you'll also get notified when the next season of Property Elevator episodes are shown, and you'll be able to watch them online immediately after they're transmitted on Sky Channel 191.
Richard, tell us how you got on then.
Well, it went so much better than expected.
Well.
There were some sort of tough questions to answer, but in the end, John made the first offer, and then Nicholas and Ranjan made a joint offer, but they wanted sort of slightly more equity than I was hoping to give away.
That's it for this pitch. If you missed some of the other Property Elevator pitches and reaction videos on this channel, we'll leave a link to some of the best ones in the playlist in the description below. See you guys in the next video.
High streets across the land are changing forever. Basically, there's an oversupply of retail premises. Shops are closing down, more are going to close down in the future. The government know this, and that's why they're introducing a light touch planning system which allows small developers to easily repurpose these buildings to residential use under a light touch planning regime called permitted development. Now, this is going to be the biggest revolution and the biggest change and the biggest opportunity for property investors that I've ever seen. And this is all coming into effect on 1st of August. So you need to know what's happening and what properties to look for to take advantage of these opportunities so that you can get in there and take that first mover advantage. I've got a 90-minute free masterclass to get you ready for August the 1st. Make sure you join me, click the link below. Whether you're a beginner or expert, we'll get you started.